Welcome right into the program. You're tuned into the DigiBank LeaderX Podcast. I am your host, Josh Carey. On this program, we bring you the leaders and innovators who are on the forefront of the digital banking industry. And today we have a solid program for you. I'm joined by the executive director at Xpert Digital. His name is Asif Sheikh. And he is a digital banking and transformation veteran with over 20 years in the field. He's contributed to the growth and transformation of several banks and tech companies globally, and his experience spans leading roles at the likes of Oracle, IBM, Coney, and CR2. Asif Sheikh, welcome to the program.
Pleasure, Josh. Thank you for inviting me.
So let's set the ground here. When it comes to digital banking, give us a little bit about your story and journey. How did you find yourself here?
That's a very interesting part, Josh. I am from my heart. I'm a technologist, a core computer science background. I've been doing technology, but I started my first job at a very large conventional government bank where I was trying to implement the technology. And it took me a realization that, how much gap there is, so much you can do with technology within the banking space. And I'm talking about early 2000s, where the banks were still struggling with the rudimentary and basic kind of technology implementations. And that was something that intrigued me to get into a career shift of moving on to a vendor side on how can we as a service provider help these traditional banks transform. And in those days, there was no digital technology. So it was more kind of technology transformation. So I work with companies like Oracle and IBM, which were working with the tier 1 and tier 2 banks globally to have a technology transformation. But over a period of time, the banking evolved so much that it moved towards technology to what we call digital transformation today, which includes technology, which includes processes, as well as the people transformation part of the journey as well. So my journey has been more kind of, right from technology to digital banking, and then helping the banks in terms of transforming their core businesses.
Now, did you know growing up, did you forecast this? Did you see yourself in this kind of role? Because I know growing up, this didn't even exist.
No way. There was this was more kind of a fantasy story that you would see in a Hollywood movie. But the way banking has been evolving, that's amazing. Like, there is a recent study, and what we feel is that in the next 5 years, the bank's branches will cease to exist. Now, that's the kind of future that we are looking at, where the banks are not being, the size of a bank is not anymore measured through how many branches do they have, but actually how much revenue and how much efficient their cost to income ratio is. And that's a fundamental difference that I've seen in the last 15 years, how the bank's performance, how the bank's size, and how the bank's efficiencies are being measured in the recent times.
That's a fascinating statement. And in the next 5 years, the physical branches of banks are going to cease to exist. Do you find that when you tell the banks this point, are they holding on for dear life? Are they scared of that, or are they willing to go all digital?
Trust me, Josh, I speak to a lot of presidents, board members, and senior executives of I would say I've spoken to almost 100 plus banking executives in the last 1 to 2 years. And everybody is having literally a sleepless night because everybody is looking at that disruption coming in from fintech technologies, from the neo-digital only banks, from other conventional banks, which are actually getting into the digital banking space. And the awareness is there. I think the bigger challenge is that these banks, they're having the problem of how to get over that, how to convert their conventional bank into digital bank. How do they upgrade their people from doing conventional manual tasks to more kind of digital? And I think that realization is there. There's a lot of investment going on by the banks in this space. However, I feel that the outcome from business results perspective is still not the kind of investments which are being made in this space.
Am I wrong in saying that this is 100% a convenience move? I mean, from a consumer perspective, it's 100% convenience. I don't know the last time I walked into a bank, which is wonderful. Several years ago, I remember my mind blowing, and it's still today, when I get a paper check and I can take my phone and just scan it and have it deposit. That is incredible. So is it more than just convenience that you're solving for these banks?
It's more than convenience. Convenience is a big element of that. However, it's more kind of like the value-added services that you can offer on the digital channels, which you cannot offer in the branch. You remember those days when you used to walk into a branch and then there would be a sales rep who would approach you and say, "Sir, do you want to have some insurance or you want to deposit some money in fixed deposits," right? That was a very manual, disconnected process. Now imagine that now on my mobile application for a true digital only bank, I apply for a service and it gives me a message, a notification that you are running out of your balance. Do you want to apply for an overdraft facility or an instant loan right with a single click of a button and instantly within 5 seconds? So it's not just the convenience part, but what we call embedded finance, where we are embedding the journal banking financial products in the daily lifestyle of the customers. So that's the convenience part, that's the security part, as well as the upselling part where the banks are able to offer more value to their consumers just than the convenience part.
We know that technology moves at an extremely fast and rapid pace. Is that the same for the digital banking industry? Does it move very quickly?
Absolutely. So technology has to play it is actually playing a important role in the digital transformation. I'll give you a very small use case. So with one of the banks in Africa, they were onboarding new customers or signing up new customers on an annual basis. And when the president spoke to us, they said that, our target is to onboard 50,000 new customers in the next whole year. And that's the number based on their conventional people coming into their branches and signing up. We said, you know what? We will at least do 3 to 5 times if we do the same thing on the digital channel. And when we launched a complete eKYC and digital onboarding solution for that bank, these guys hit the 50,000 new customers number in just 50 calendar days.
50.
So they're onboarding 1,000 new customers on a daily basis through the mobile application that they have. And interestingly, I use the word calendar days because in a mobile and digital world, there is no weekend, there is no Saturday, Sunday, there are no off days, there is no 9 to 5 limitation, like you can onboard yourself after 5. So it's a 24/7 kind of a banking. And that's like a revolutionizing concept within the banking space.
So you're the executive director at Xpert Digital. This is what you do. So you could probably speak on this better than most anyone. In the coming years, what opportunities or obstacles do you see in the industry?
Opportunities, I feel there's huge potential. So I would say that despite the fact that banks are spending almost 10% of their revenues on technology, despite this huge investment, the digital banking is still 5% done. So there's still 95% of technology and digitization still required in the banking space. And especially that we will see more on the lending side. We would say that, digital banking, the banks are still struggling on the basic account servicing digitally. However, there's a big scope of digital lending, digital mortgages, personal finance, unsecured, secured financing, embedded finance. Now, that's a huge potential. Like how many times still in 2024, when we apply for a car or when we go and buy a home, we have to go to a bank or we have to talk to a mortgage guy who will actually get a loan for us. Now, the way we see in the next 3 to 5 years is that banks through digital technology will embed their loans and financing products in the customer's buying journey. So if I'm online buying a car on a portal, I don't need to go to the bank to finance that car. The banks will have that financing products embedded in my buying journey so that the bank would know, Mr. Customer, you are buying a new car. I have this much interest for you and this offer for you if you take my financing product. So I think there's a huge potential from lending perspective for the banks to embed themselves in customers' lifestyles and journeys. And I think the potential threat or the potential limitation is technology and finding the right partner in that journey. That's very, very important because what we feel is that technology companies are selling their technology. Banks want to do their digital banking numbers. However, there is a gap between these two. So there is a more demand where services companies who have a potential of both these domains, they can help the banks in terms of utilizing that technology for the benefit of the bank in achieving their digital banking objectives.
Is there any bank that isn't ready or right to become digital? How do you as a company evaluate who's a good client or customer to work with?
I think the criteria starts from the top. So if the first thing that we look at is that how adventurous, how excited, and what is the vision of the board of the bank. Because if the board members are not convinced on the disruption which is coming into that bank, then rest of the management and the middle management will not be able to convince and seek those kind of investments. So the basic criteria that we have, and we take that as our responsibility to educate the executive management and the board of the banks to see the disruption which is coming and guide and coach them on what is the right way of doing that digital transformation. So it starts from the top, Josh.
And you see that as a consumer, this is something across the board that we all want, or do you also see maybe generationally hesitations through this?
I think there is some hesitation. So, conventionally, large banks are slow to adopt digital technology. In fact, I would say if we look at the investments that they are making, that might be cumulatively on an industry average will be much higher than the smaller banks. However, the success rate of larger banks doing digital transformation is much lower because they have to deal with traditional systems, traditional people. People are not open to change. And that's where, the larger banks are kind of struggling there. However, the appetite, the vision, and and there is a will to invest and digitize the larger banks as well.
Amazing. So as the executive director of Xpert Digital, what should the listener do next? How can they get more information on you?
Right. So from Xpert Digital perspective, we are serving around 44 banks globally with their digital transformation journey. So, we have our website, we have our contact details as well. So banks can reach out. What we help banks is in their right from digital strategy, where we build a 3 to 5 years digital roadmap and strategy. And then we kind of help the banks in selecting the right technology and then successfully implementing that as well. So there are 3 key attributes that we deliver on. One is the quick time to market. So we can convert a traditional bank, make them go live on a particular retail banking use case in less than 4 months. And then we also help them reduce the risk of digital transformation. And then the third thing is how to advertise, promote, and market the digital banking products to their customers. So these are the 3 areas where Xpert Digital helps our customers on.
Wonderful. Asif Sheikh, the executive director at Xpert Digital. Thank you kindly for joining us on the DigiBank LeaderX podcast today. I appreciate your time.
Thank you so much, Josh. It was lovely talking to you.